Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The dollar steadies close to its highest levels in 3 months. Indian rupee forwards move to their weakest level since February 2017. Crude rises above the $68 a barrel mark as French President Macron says he thinks Donald Trump will pull out of the Iran nuclear deal. Fortis says Manipal's latest offer will limit its ability to run a competitive bid process. Write-off for an insolvent client and an impairment loss on one of its acquisitions hurt Wipro's March quarter performance. And boy, that stock is a bit of an anomaly to what's happening to the rest of the IT pack, likely to react today. Anyways, we'll talk about that. First, a quick check on what happened across the world. It seemed to be an okay place compared to what was happening day before yesterday. Mixed bag performance. You already heard that on the podcast with Alex and Agam any which ways. But for all of those who are tuning in right now, the US markets had a bit of a mixed close, and it's showing in the way our markets are likely to start off as well. The Asian markets are all over the place, mixed bag. The SGX Nifty, must say, which has been very resilient, likely to start off on a flattish note as well. Let's wait and watch. So the last 4 days, the SGX Nifty has been anything but a lead indicator of what will happen to our markets. What did our markets do? I think fairly light losses, and you typically see a day of distribution when there's been a big rally in the penultimate day to expiry, but I don't think we saw any kind of that indication yesterday. There's just some early indications of how at highs we are seeing some bit of selling pressure coming in, because while the headline numbers don't look all that great or all that choppy, enough and more number of stocks which had gained quite a bit are showing some serious pullbacks from the levels that they were trading at. In today's session, you probably expect a choppy day. Realty stocks activity would be very, very interesting to watch out for, simply because they've had a meaningful rally. The move that happened yesterday was in anticipation of the Mumbai DP plan. Sure enough, 3 or 4 of those names, which have already seen some activity. I don't quite know if there'll be further activity out there or no. So it's an interesting pocket which has had some gains behind it. Really doubt it can extend itself too meaningfully, but a very important trade pocket. Lots of people trade the real estate names, and therefore from a trade perspective, I think realty stocks will be the key ones to watch out for today. I wouldn't be surprised if there are some pullbacks that come in onto those. And from among stocks to watch, I think a clutch of results that are coming out today, but probably the most important ones would be the 2 corporate-facing banks. Yes Bank, you could still argue, could well be par for the course, but Axis would be a really, really interesting number to monitor. And I think that's something that Shraddha will come over and speak about on First Word as well. What's to be watched in those numbers, not just the headline numbers, but what else in terms of commentary or other factors that will determine what Axis Bank does. So this arguably is the most important result to watch out for in today's session. On First Word today, the rupee stops just short of the $67 to a barrel mark, and we'll talk about that as well. So that's a conversation that we will have. One-time write-off hurt the numbers of Wipro, and Agam Vakil will join us to tell us how the company fared operationally. RBI's new stressed asset norms are expected to hurt Axis Bank more than Yes Bank in the March quarter. Shraddha will tell us why. And Fortis and its many suitors continue to make headlines just hours before the evaluation panel is supposed to submit its recommendations. Yatin will tell us all about it. And then we'll of course talk about all the key stocks that you should be monitoring in the session today. But first, the currency. The rupee is inched close to the $67 to a barrel mark. Indian currency closed at 66.9 in trade yesterday, and that's the lowest in almost 14 months. A lot of that weakness is attributed to a strengthening dollar, rising oil prices. The question mark only is it possible to predict where is the currency headed? Could there be RBI intervention as well that could come into play? Let's find all of that from Michael Every, Head of Asia Pacific Financial Markets Research at Rabobank. Michael, good having you. Good morning. Thanks so much for taking the time out and speaking to us at Bloomberg Quint India. What's your sense as you look at the EM currency pack, Michael? Would you believe that dollar strength by and large and some nervousness due to the rise in commodity prices, specifically crude, could continue to have a bearing on how these EM currencies do?
Absolutely. At the moment, the whole EM complex is under pressure. I think near term, there's not going to be any easing in that because we've got the US bond yield in 10 years over the psychological 3% level. It's only 2 basis points higher than it was a few days ago, but psychologically it seems more important now. But that's obviously given the US dollar a technical lift. And the global geopolitical backdrop in terms of a number of intersecting problems from North Korea to Iran to the US-China trade stance are all coming to a head within the next week or 2 weeks, which is obviously a nervous backdrop for emerging markets in general.
Michael, do you think this whole development over the last 24, 48 hours or maybe slightly longer than that on this US-Iran issue is now the next big thing to watch out for? I mean, to your mind, what's the key monitorable? I know you highlighted a number of factors, but what to your mind is the key monitorable now?
Well, I think for most of the market, it's still basically a short squeeze because everyone's been so short the US dollar for so long, despite the fact the Fed have been raising rates, that the fact that it's turned around at all, whatever the trigger was, is suddenly seeing people have to scramble to cover their positions. So if we get more of a short squeeze, the dollar could move a lot further in a very, very short period of time just on a purely technical basis. And that's before we start looking at anything to do with the Fed or anything to do with China or Iran or North Korea, et cetera, et cetera, et cetera. You add those into the mix and the move could get even more violent, potentially.
Interesting, the et cetera out there. Michael, you know, a lot of people over the last, 18 to 24 months, if not longer, have been correlating what could happen to EM flows as a result of the yields hitting 3%. And we've had a number of people in the last 3 months come and say that what the Fed is doing is really irrelevant. Look at the LIBOR, look at a couple of other lead indicators as opposed to the Fed moves. The Fed is probably just following the yields. To your mind, now that we are northwards of 3 and not seeing any kind of buying in the US bond markets, what's the next big or what's the next thing to watch out for with regards to the bond yields and the simultaneous or the resultant impact that we could see, if any, on flows out of EMs?
Well, I mean, obviously the causality and the direction is fairly clear that the higher the US yield goes, you know, the less favorable the backdrop is for emerging markets. I think we're all cognizant of that. So then the main question becomes what happens next to US yields? And, you know, the answer there is nobody knows. We are still structurally, as far as we're concerned at Rabo, in a bull market, not a bear market. Technically and maybe cyclically, we might be moving towards a bearish phase, and you have to be aware of that. But we're not seeing yet any underlying structural argument that points to higher synchronized global inflation. Even in the US, if the economy is doing better, it's still far from certain that we're actually going to see any wage pressure. And without wage pressure, we're not going to get any sustained inflation. And without sustained inflation, we're not going to get long-end yields in the US moving too high. So, yep, to summarize, I think near term, we could certainly see them going a little bit higher again. You know, we're hardly smashing through barriers at the moment, but you know, they could keep going up, and that will keep the US dollar on the front foot and emerging markets on the back foot. But I'm not quite sure how sustainable the bond market action is. The US dollar is a different issue, but that taps into a different subset of issues.
Okay, and I'm glad you put that quite succinctly. Michael, just one last question. I don't know how closely you look at the Indian rupee, but there's a lot of pressure there, arguably one of the 3 worst performing currencies in the recent 1 month, if I can use that period. What next here?
Well, I mean, you know, if you bring up a chart, you can see that 67 obviously is a whisker away psychologically. And after that, you know, people will start thinking about when's it 68. And then, you know, you can start looking at levels like 68.4 or, you know, even close back up to 69, just in terms of retracement of where we've been over the past couple of years. But none of that really speaks to the fundamental. It's interesting that India is starting to sell off so aggressively just now, because it has actually been a really strong, stable currency in emerging market terms for a long period of time. But what it does potentially underline is that emerging markets have to accept the fact that even when they think they've turned the corner, and that's it, you know, we're no longer vulnerable to a dollar bull trend. When we do suddenly see the dollar get the wind behind its back, once again, the sell-off happens. You know, it's going to be a long, long time before we move away from that structurally, regardless of which emerging market we're talking about, and India in particular.
Okay, Michael, really appreciate your time. Thank you so much for taking the time out and speaking with us today, this morning.
My pleasure.
That's Michael Every of Rabobank. But I think he summed up, two key things. One, the movement in the dollar or the strength in the dollar is not necessarily all due to what's happening to the yields. A lot of other factors, geopolitics might also be at play here. So therefore, the yields may stop rising further if they do, but that will not have a resultant impact on the dollar. Dollar may still continue to strengthen as well. It also shows what people outside India are talking about the currency levels, because Michael did refer to levels that people will start talking about 68, 68.4, which means already people are talking about that. I know a lot of talk about how intervention might come in at some point of time into play for the yields and for the currency as well. Let's wait and watch if that happens. So there's a bit of a pickle out here. We may nudge the 67 mark in today's session as well. Let's wait and watch, and then we take it on from there. The question mark only is, does it have any impact on the IT space or the exporters? And maybe some analysis by Agam will show that not necessarily so. But before we get to that, let's first get in Agam in to talk about Wipro, because a weak fourth quarter, the profit for Wipro, which is the third largest software services firm, declined 6.6%. Net, I can go on to the numbers, but the long and short of it is it was sub-estimates. Agam standing by with the key takeaways from the Wipro earnings. Agam, good morning.
Good morning, Neeraj. Well, as one broking house put it, the ghosts of the past are here back to haunt Wipro, and that's something which is very evident in the company's earnings for the fourth quarter as well, something that we may expect could be a continuation of trend as moving forward. But let me just start off with your numbers. When it comes to your dollar revenues, that was largely in line, but we did see substantial weakness in the rupee revenues, where the top line moved up by just much as 0.7%. On the profitability front, it was a completely different picture. And when it comes to margins, operating margins standing at around 16%, much lower than the consensus expectations of around 16.8%. Now, moving in, with respect to the IT services dollar revenues and the expectation in the first quarter, we're looking at some amount of weakness. In fact, expecting declines of as much as 2.3% to 1% against expectations of just minus 0.5% and perhaps in growth of 1%. That's where the problem lies for Wipro. We are expecting some more problems. And speaking of the problem, one of the biggest one was the insolvencies that two of its largest clients are facing. And because of that, they had to acknowledge about 317 crores of provisions in the third quarter, about another 144 crores of provisions in the fourth quarter. And this is owing to two different clients. And that's also the reason why we are looking at the weakness in the first quarter guidance as well. Don't forget, the first quarter is also a seasonally weak one for Wipro. And that is what is expected to bear down on the stock going into today's job trade. But moving in, perhaps a silver lining, we've seen good growth coming in for two of their key verticals, BFS up 4.7% and manufacturing technology up 4.1%. And that's also the reason why you're looking at those IT service revenues standing at around 2.4%. But this is once again only a silver lining, and we are not certain if this trend can continue in the first quarter. And on the whole, we are not expecting a positive opening for Wipro, at least as of now, based on the kind of numbers and the guidance that the company has given out.
That'll be interesting, Agam. Let's see. All IT companies, because of the tailwinds in the sector, have seen buying in dips. Wipro may just defy that trend. You never know, right? You never know.
I agree with that. Because, at the end of the day, it's not out of the blue, and some of the hits in the quarter were largely factored in as well.
Okay. Interesting. Agam, that's not all, right? Because we were talking about the weakening rupee with Michael Every just a minute ago. And, almost everybody likes to correlate rupee weakness to IT index strength. Fundamentally, is there a case for that?
So that's erroneous out there, and I'm going to establish that, because in fact I'm going to bust this myth, and I'm sure the informed will know that there is no correlation between the rupee and the IT index as a whole. So I'm going to start off and go back 10 years, in 2008 and 2009, when the dollar was trending. Why is it that the IT index was falling. Again, this around the same time in 2010, 2011, while the IT index strengthened, we actually had the dollar weaken against the rupee. Moving in around 2012, 2013, we actually started having a positive correlation between the two. And after 2013, 2014, there really isn't too much of a trend to look at when it comes to the Indian rupee and the Indian and the Nifty IT index. In fact, in the last couple of months, while the Indian rupee was also weakening, we also saw the Nifty IT index move up, and this was the first time in 10 years. So the point being, there is no correlation, or very little correlation, if at all. Even if there is, it will be in the short term, not necessarily in the long term, as established by this particular chart out here, Neeraj.
Well, very interesting. And Agam, thanks for putting that into perspective. So for everybody who thinks rupee depreciation would mean go out and buy the IT stocks, well, that need not necessarily be the case. Thanks for that, Agam. I'm just going to take a leaf from there and talk about some of the other stocks to watch out for as well, because Wipro is one. And definitely Agam has put that into perspective. There are 2 or 3 others that people should watch out for. So before we get to the companies that will come out with numbers, just 2 or 3 key stocks to watch out for. One is Wipro, of course, and Agam has put that into perspective. I think Indoco Remedies is the other one to watch out for in the session today. They've gotten a statement of GMP non-compliance from the UK MHRA for Goa Plant 1. So do watch out for that one. It already fell about 6-7%. Is there more in store? That's the question to ask. Let's wait and watch. Some very strong results by Indiabulls Real Estate, M&M Financial, and Wendt. Not all of these stocks were up and about, so it'll be interesting to see what happens. Indiabulls Real Estate in particular, the numbers look blowout. I'm sure there were one-offs out there, and we'll talk about them a bit later on in the show. But do watch out. There could be some interesting movements here, and some very, very interesting bulk deals. Shelley Engineering, HDFC Mutual Fund continues to ply in this one. They continue to buy. They've bought it at, I think, 700 or 800 levels as well. Then some more later. Yesterday, 1300, some more purchases done. Watch out for Shelley. Again, Malabar India Fund. They've bought from the promoter of Uniply about a month ago. They've added a large stake in yesterday's session as well from the promoter. So let's watch out for Uniply. And AVG Logistics. Haven't heard too much about the fund, but Girik Wealth, an interesting duo of fund advisors. Their track record is impeccable for the last 7-8 years. They've added into AVG Logistics. So that's another very interesting name to watch out for in the session today. But of course, we'll also watch out for the banking sector, because 2 corporate-facing private lenders report their earnings today, Axis Bank and Yes Bank. Shraddha Babla is standing by with what one can expect from the numbers. Shraddha, let's start with Axis. Expected to bear the brunt of both the insolvency procedures and RBI's new circular on stressed assets, isn't it?
Well, yes, Neeraj. So actually, Axis Bank is where the impact of that RBI circular is likely to be significant, and hence analysts are actually expecting a big dent or hit to the profitability numbers, and that RBI circular will also bring back the gross slippages back into focus after they moderated in the third quarter. When it comes to NCLT exposures, they're well covered. The provision cover ratio to the aggregate, both the 2 lists of IBC accounts is relatively stronger at 68%. So it's more the RBI circular that everybody should really be worried about. But in terms of key numbers, net interest income has seen lagging loan growth just about 4% higher at 4,900 crores. Net profit should dip by about 45-46% to 663 crores. I do want to say and highlight that there's a big divergence in that expectation number depending on what analysts have chosen to factor in as a provision for this quarter, because remember that you also had RBI giving the relief as far as spreading MTM and bond losses, M2M bond losses is concerned, and also with respect to be able to write back provisions in excess of 40% on NCLT accounts, at least for the March quarter. So we don't know how much and if the bank will use these provisions, but 663 crores is the Bloomberg consensus estimate. Net interest margins could see a downtick of about 8 to 10 basis points on a sequential basis. The good part is that loan growth should should continue at about 19 to 20% on account of the growth in retail loans and also SME loans, which had seen a sizable pickup in the last quarter. Slippages were at about 4,500 crores as of 31st December. That number analysts are expecting could go up materially to anywhere between 6,000 to 9,000 crores. Again, a big variance there, but that's the kind of number that they're expecting given the recent RBI regulation, and hence that provisioning and credit costs for the quarter will remain higher. Gross NPA from 5.3% in December could move up to anywhere between 6 to 6.4%. So those are the key numbers to watch. We will also be looking out for the movement in watch list, the slippages that are coming from outside of the watch list. Any comments on resolutions and recoveries, because they had seen sizable recoveries and upgrades of about 4,000 in the last quarter. That could be some saving grace, at least for to some extent, for Axis Bank. They also have a high exposure to the power sector, which has been under stress and a lot spoken about during this quarter. So any commentary on that will have to be watched out for. Impairment from the below investment grade book, that is BB and below rated exposures, is another thing to watch. Any commentary on loan growth and margins, and also comments with respect to the planning process for inducting, looking for a new CEO and MD, as Sharma's term would end on 31st December. So if anything, that's another thing that we will be watching out for, at least for Axis Bank.
Okay, and that's of course, will the market say yes to yes, Shraddha? You kind of spoken about it briefly, but what's the key thing to watch out for here?
Right. Neeraj, at least Yes Bank's quarterly numbers should be much better than Axis, because like we said that the impact of RBI circular shouldn't be as sizable for Yes Bank as compared to Axis Bank. So no large asset quality surprises are expected for Yes Bank at least. But having said that, provisions are expected to remain higher, and that could drag profit growth and number, compared to what trends we've seen in the previous quarters. In terms of key estimates, net interest margin is seen 24% higher. 2,034 crores is the number that analysts are working with. Net profit is seen about 18% higher at 1,085 crores. Loan growth again should remain strong, 35 to 40% growth. That similar trends that we've seen in the past quarters on account of strong growth in retail banking assets. Asset quality again more or less should remain steady. The gross NPA number is expected to remain below that 2% mark, and there should be a limited impact of recent RBI changes on the asset quality. So the most important thing to watch will be, of course, if that kind of momentum on the retail asset and liability front continues for Yes Bank. The quantum of loans that are sold to ARCs and the management guidance for FY19 credit costs will be important, because they had revised it upwards in the earlier quarter. So more or less, the provisioning requirements not coming from the RBI changes, but more to do with its exposures to NCLT accounts, where the provision cover is relatively lower. For the first set of accounts at about 51%, and second set of accounts is about 43%. So that's where the focus will be, Neeraj.
Interesting. Watch out for both of these. Arguably, both of these in and around the market hours as well. Yes Bank at least will come out during market hours, so watch out for both of these. Thanks a lot for that, Shraddha. It's expiry day today as well, so it'll be very, very interesting to see what happens to some of these. But I tell you what, something that made Yatin a permanent fixture on First Word is Fortis. They're not happy with Manipal's latest offer. In a statement released to the exchanges, Fortis says that the revised bid limits its ability to undertake a competitive sale process. It alleges that the Manipal seeks to impose additional onerous conditions on the deal. Of course, I think the whole process might get delayed because Renuka Ramnath has decided to move out of the whole process as well. So Yatin joins us with all the developments. Lots happening in 24 hours, almost every single day.
Yeah, every single day, 24 hours, we have announcement coming in from Fortis, and today we have something, in two parts. Of course, the first part was that the TPG and Manipal combined are, trying to impose certain conditions on Fortis Healthcare. Of course, this is done, and communicated to the board of Fortis Healthcare. Now, there are, 5 bids which have come in so far for Fortis Healthcare. Of course, 4 of them are, binding in nature. In some conditionality or other, they are binding in nature. But now what TPG Manipal have communicated to Fortis Healthcare, that, the various provisions that are there in the agreement which have been signed so far, they have put a condition so as to enter into some bit of exclusivity, if I may put it so, which means that if Fortis Healthcare, really takes that and signs that up, or accepts that, then Manipal will be in a position to dominate the transaction, given the fact that no other parties will be able to carry out the bidding process, or probably give an offer that can be evaluated by Fortis Healthcare. So to put it in simple words, we have Fortis Healthcare, which is told and informed the stock exchanges that Manipal and TPG Combine are trying to put certain conditions, and if those conditions were accepted by the board of Fortis Healthcare, then the competitive bidding process cannot run anymore, given the fact that they might be in some bit of exclusivity, or there will be some provisions that will enable Manipal and TPG to fend off other potential bidders, which include
or not enable Fortis to have conversations with the
other parties. So we have IHH, we have the Burman Munjal family office, and we have Radiant Life, and also of course Manipal. So all of these serious players probably would be sent back home if Manipal TPG are able to get that signature from the board. Of course, let's see what shape does it take. And one more blow which came in overnight was the resignation of Renuka Ramnath. Of course, the company communicated to the stock exchanges that the expert committee that they formed, along with one of the members, which is Renuka Ramnath, a private equity stalwart, she resigned on personal grounds, and since she was preoccupied with various other things, she decided to step down. And probably, the expert committee is probably short of one expert. So I don't know really how, the other members would take it, or how will they incorporate a few new members so that the replacement can be done on an urgent basis, since we have the evaluation which is currently going on. So, a tricky situation. On one hand, you have the companies committee, people resigning, and on the other hand, you have one of the potential buyers or the bidders trying to impose certain conditions which may hamper the entire bidding process itself.
Well, let's wait and watch what happens there. And how soon does it happen? I think thanks for putting that into perspective. So that's Fortis. Well, no surprise that the stock isn't going anywhere. It's just too difficult a process to figure out from a minority shareholder's perspective. Flat as flat can be. Fortis, don't think there'll be too much today either. But important news, and therefore need to be mentioned. That's all that we have on First Word today, though. Before we proceed to today's trading, a quick update on what we have lined up for you later on in the show. Where does the Indian market stand amongst its global peers, and what's the next big trigger for Indian equities? Mahesh Nandurkar of CLSA joins in to talk about that. We bring you an excerpt from a very special chat with Nikhil Vora on Alpha Moguls, All Things Consumption. That's coming up at 9:30. And does Reliance Nippon Life Asset Management Q4 performance meet expectations? Sundeep Sikka, AD and CEO of the company, would be speaking about that. All of that a bit later on in the show. Full tilt towards the day's trade on the other side of the break.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point in time. Starting off with the Nikkei, which is trading higher by as much as 0.6%. On the other hand, Chinese indices are showing some amount of weakness. So Hang Seng down 0.6% and Shanghai down nearly 1%. That said, let's also take a look at the SGX Nifty, and that is showing largely flattish moves at around 10,550. Let's also take a look at what the Indian equity derivatives markets are showing and the kind of trends where we can expect this expiry. Navneet, good morning.
Good morning, Agam. Well, finally, the rollovers picked up in yesterday's trading session, though there was a late hour selling that we got to see. Rollovers for Nifty stood at about 45%. Let's just pull up the Bank Nifty rollovers also. They also stood at about nearly 50%. There was some addition when it came to the open interest across all the series for both Nifty and Bank Nifty. Well, most importantly, today's the expiry day, so do watch out for India VIX. There was some volatility seen in yesterday's trading session. VIX went up by almost 4% yesterday, finally closing above that mark of 12, around 12.3. In terms of put-call ratio, what happened yesterday was more of addition seen on the call side, and that was the reason why you did see the PCR slipping for Nifty 1.61. For Bank Nifty, it slipped from 1.3 to almost 1.1. Pull up the option strikes. That's going to tell you where exactly the open interest build-up was seen. So for call strike, 10,600, there was a lot of writing seen around this mark, and if you look at the 6,600 put, there was unwinding seen. The range which one was watching out so far for this series was between 10,550 to about 10,650, but we're already trading around the mark of 10,550. Most of the analysts are of the view that 10,500 now will be a very crucial support for this market. What did the institutions do in yesterday's trading session? Well, the FIs added contracts both on the long and on the short side when it came to the index futures. And if you look at the options data, actually there was more of unwinding that was seen, and that was clearly visible if you look at the call long and the put short. That's been the trend actually in the last few trading sessions, but they've been buying a lot of protection, I think, throughout the week. So put long added nearly 8,000 contracts. In terms of stock futures, watch out for Raymond. That counter was really active in yesterday's trade, and finally it did enter into the F&O band in today's session. That closed with gains of 6%. There were a lot of long positions which were built up for this one. The other stocks to watch out will be NIT Tech. This counter closed at day's high, picked up momentum after falling the previous day. 9% higher, I guess. Yep, 9% higher. And if you look at the OI build-up across the series, that showed you that there were fresh long positions. The rollovers were also looking good for this one, 48%. The other counter to watch out will be PC Jewelers. That was the top loser when it came to the F&O securities. It fell nearly 15 to 16%. So watch out for all these stocks when the market opens today. Back to you guys.
Okay, we will. Thanks a lot for that, Navneet. So lots of companies, lots of individual stocks to watch out for. And I'm sure our research team will join in just moments from now to talk about all the key numbers that came out post-market hours yesterday as well. And then we'll ask Avinash Gorakshakar about all of those. He's already tweeted his opinion on some of the results. So we'll talk about them, Avinash. But good morning and thanks for joining in. Let's start off with the big boy in the IT space, Wipro. My question to you is simple. For people who are holding the shares of Wipro currently, is it prudent, if you think it is, to get out of Wipro and log into some other IT name?
No, I think, Neeraj, looking at the kind of guidance they have pointed out, I would believe that this next couple of quarters are going to be equally challenging, and I think it would be better to put your bet on something like a TCS or maybe even a KPIT within the smaller IT cap space, because clearly Wipro has under-delivered on the margins, obviously because of that Aircel account. But I think even going forward, the top line guidance which has been given is much below what the street expected. So I think nothing great is expected from Wipro. And my sense is, I think not only today, but at least over the next couple of quarters, it's going to be a challenging time before Wipro actually turns around. So probably KPIT or TCS, where the visibility is much stronger, and I think the market expects that the digital space would actually give shape to better numbers. So I would believe that yes, Wipro could definitely be exited, and I don't think there's going to be a very significant kind of upside, at least in the near term.
Avinash, over the past 3 or 4 months, we've seen a lot of outperformance from the mid-cap IT counters. That said, when you consider the growth rates and expected growth rates for FY19, they are only a tad better than something that a TCS or an Infosys or the expectations that HCL Technologies will have. So if you pitch them together now with the kind of run-up that we've seen in the mid-cap IT stocks, how would you pitch both the sectors now, or both the sub-segments of this particular sector?
No, I think clearly, Agam, the price performance of the mid-caps has actually been quite solid compared to the frontliners. But after the results of TCS have come out, I think clearly the larger frontline companies also seem to have actually a better handle on the earnings and on the visibility. So clearly TCS, or for that reason even HCL Tech, I think clearly these are choices from the frontline. From the smaller cap, I think something like a Mindtree, KPIT, these are stocks which one should obviously look at every decline, because my sense is that once the US economy takes off and probably we see better visibility in terms of new client deals, these are companies which obviously have been beaten down very badly, and we could possibly see the next 6 to 12 months these companies showing better margin. In fact, the rupee weakness is going to be another factor which is obviously going to get factored into these stocks.
Okay. Well, I'll take the liberty of talking about one of the results that came out. I'm sure our research team will speak about some of the others in moments from now, Avinash, but Mahindra & Mahindra Financial Services. Now, it's not a one-quarter wonder. The last 2 or 3, they've been able to deliver reasonably well. There seem to be some tailwinds at play here.
Yeah, definitely. In fact, the market was obviously pleasantly surprised that, at least on the asset quality side, on the revenue side, I think definitely last 2 quarters have been much better than what the street expected. And I think that is what the price actually reflects. So I would believe that, yes, the stock is definitely fancied by a lot of funds and HNIs. And if they do continue this traction, and the management had appeared pretty solid and confident in the previous con call. So I think if they continue to do the good work, hopefully if there's a good monsoon, because the monsoon will play a very important factor for them. Hopefully, asset quality has to come down further, and I think if the asset base and the loan book growth comes pretty faster, then possibly you could see a further re-rating from a year on.
Interesting. Okay, do watch out for these. One more set of stocks before we get the earnings picture, and that is the 2 companies that came out with numbers yesterday, Sterlite Technologies as well as Tejas Networks.
Yeah.
Similar lines of work,
yeah.
Great promise for growth ahead, but both the stocks corrected.
Yeah.
Tejas, of course, I think had a quarter which was challenging,
yeah.
but Sterlite Tech's quarter seemed okay, Avinash.
No, exactly. I think it seems a little bit of profit booking, Niraj. If you see the kind of profit growth both at the operating and at the net level, and the kind of order book they have, almost 5,000 odd crores, I would believe that yes, in the near term the stock could possibly consolidate, because the management has gone on record saying that possibly some further dilution could come in for expansion. But as far as Tejas Network is concerned, I think it was one of those quarters where deliveries were not up to market expectations. I think the management hinted that probably the reduction in top line growth could be compensated in the coming 1 or 2 quarters. So I think clearly this space is going to see a lot of action in FY19, and Sterlite Technologies definitely is a stock one should definitely accumulate on every decline.
Okay, hold that thought, Avinash. We'll just go and take stock of all the companies which will be in focus in today's job trade on the back of news as well as earnings. And there are a lot of earnings in the mid-cap arena where we are expecting some of these counters to move on the back of the kind of results that we've seen. So we have Shraddha and Nikki joining us. Guys, good morning. Shraddha, I'm going to start off with you. What do we have in stocks and news today?
So Agam, Indoco Remedies is one stock that we want to highlight. Earlier in March, their Goa plant 1 was inspected, and that time they received 3 critical and 4 major observations. That was something that had happened in March, and that observations have now officially been converted into the form of a statement of GNP non-compliance coming in from the UK MHRA. Now remember, the contribution of revenues from EU are relatively important. About 100 crores or so is what analysts peg it at. So negative development for the stock. You could see some reaction there, because they have said that this will temporarily impact their Europe business, though they're trying to shift some of the products to some of the other UK MHRA approved facilities, but you could see some reaction on that counter. You have Solid Holdings and Ventures, which has approved the issue of shares worth about 330 crores to various foreign investors. It includes names like Steadview Capital Mauritius, ABG Capital, LTR Focus Funds, so watch out for that name. Keytex Garments, they have approved additional investment of 400 crores to expand capacities. You have a ET report which says that IDFC is in talks to sell their mutual fund and broking units for about 6,000 crores. Bain Capital, Warburg, Yes Bank and IndusInd Bank are the names that they've shared, which have seemed to have shown interest. So watch out for IDFC. Uniply, where they've allotted equity shares to non-promoters at a price of 400.85 per share, and also 410.85 per share, and they've also allotted convertible warrants at that price to promoters and non-promoters. Additionally, there was also a bulk deal on that counter where Malabar Value Funds, two of their funds collectively sold 4% stake, bought 4% stake, which was sold by the promoter. Hathway Cables also saw a bulk deal where CLSA Global Markets sold 5.7% stake, and Shelley Engineering, where HDFC Mutual Fund has added another 1.2%. So that's another stock to watch out for.
Right. Thanks, Shraddha. And what are we tracking with respect to earnings today, Nikki?
So the first one that we're tracking is ICICI Lombard. Now we don't have much of the estimate, but it looks like a muted to inline sort of a quarter. Domestic premium seems to be have risen by as much as 10% to a number of 2,926 odd crore. Profitability is up by 18% year-on-year basis for this counter. Combined ratio stands at 99% as compared to 97% that we've seen in the corresponding quarter. Jindal Stainless, it's a good quarter operationally. Revenue have risen by 38%, and a profit, however, has come down by 29%. But then the EBITDA growth is at 24% at a number of around 388 crore, implying that the cost efficiency of the company along with the top line growth has aided the overall operational performance. However, the finance cost, which is risen by as much as more than 200%, is what is weighed down on the bottom line performance of the company. Indiabulls Real Estate, on the face of it, it looks like a strong number, but then revenue stand at around 2,000 odd crore, net profit at around 1,600. But then do bear in mind the fact that it also includes one-time gain of around 2,777 odd crore on account of divestment into 50% stake in two of its subsidiary. Other one that we're tracking is Agrotech Foods. Now remember, Jhunjhunwala and family holds roughly around 7% stake in this counter, but then it's been a muted sort of quarter for this company. Revenue is up by 4%, net profit up by 7%, and EBITDA, operational performance too, has been muted for this company, a 7% growth at a number of around 15 odd crore. Syngene International, a good show operationally. Revenues up by 41%, net profit is just up by 8%. However, the EBITDA, that's almost up by 28%. This is on account of operational efficiency. However, higher finance cost has what has led to a bad bottom line or muted bottom line performance for the company.
Well, thanks for that, Nikki. Of course, we'll be watching out for those as well. Thanks, Nikki and Shraddha, for joining us here. But Avinash, if I can take the matter of the two big earnings from the banking space with you, Yes Bank and Axis Bank, what can we expect from there, and are we expecting any big positive or negative surprises, especially with respect to Axis Bank, because there are some concerns with respect to asset quality there?
No, I think Agam, Axis Bank, I think the key number to watch would be the asset quality number and the restructured book, and what could be the entire watch list, because I think the markets are clearly looking at painful quarter number, and obviously at least for the next couple of quarters you could see Axis Bank under delivering. So I think clearly what kind of commentary comes from the management on the watch list as well as on the asset quality picture is very important, rather than the standalone number which is presented today. As far as Yes Bank is concerned, I think the only key number to watch would be the fresh provisions number in terms of loan book growth, in terms of CASA as well as the geographical reach. I think the markets are expecting a decent performance from Yes Bank. I think on the provision side, whether these numbers are one-off or whether they would continue to be elevated, for the coming quarters is something to be watched out for.
Avinash, if somebody is enthused by this Mumbai redevelopment plan or the Mumbai development plan that has been announced yesterday, what companies could benefit? Because I mean, the way I looked at it was that hitherto the JD-JV model was garnering a lot of interest, the likes of Godrej Properties, Kolte, but now landowners, because of the increased FSI, could be in for a serious bonanza as well if some of the projects are applicable for that. What would you pick and choose out here?
No, I think clearly within the quality space, Neeraj, something like a Godrej property or typically, even Oberoi Realty, because they have also said very clearly they are looking at the affordable housing space. I think, these kind of plans, Neeraj, to be frank, are very grand plans. Execution is very important, because a 20-year-old plan, which is been outlined, I think the markets would obviously sentimentally be very positive and be happy about it, but I think execution is very important. So within the space, I think one could always give a thumbs up to well-established players like maybe Oberoi Realty or a Godrej Properties. I think other companies would also obviously sentimentally be boosted, but typically I would believe that unless we see the fine print and the execution of each of these players, I think it's difficult to take a call as to which stocks would actually run up in the medium to long term.
Okay, Avinash, there was an interesting chat that I was having with some other experts yesterday. It was in the underclothes segment. I was looking at the Page Industries price to earnings. They're quite high. But what I'm also looking at is the sudden surge that we've seen in Lux Industries over the past 1 month or so. And that is actually catching up with Page Industries. Page Industries are actually 5 times that of Lux Industries in terms of size. Yet in terms of valuations, Lux Industries is not too far away. My question really is, how are you viewing this particular sector when you consider the entire consumption theme out here? And how would you play? Would you prefer staying with Page Industries, or would you start looking at something like Lux Industries or a Rupa or a Dollar Industries?
No, I think first of all, Agam, this industry is going to grow quite significantly, considering that with the GST coming in, you're going to see a shift from unorganized to the organized sector. In fact, there's a large unorganized sector which operates within this segment. Although competition is pretty competitive, I would believe that players like maybe a Lux Industries, a Dollar Industries could be well positioned, considering the fact that they cater to the lower and the middle end segments. Page Industries obviously has been in the market largely catering to the premium segments, and I think the markets have already seen the kind of growth this company has delivered. But if you look at the financials of Dollar, or for that reason the leverage of both Lux as well as Dollar Industries, I think these are pretty well leveraged businesses, not very high debt on the balance sheet, and with a little stronger boost on the top line, you could possibly see both Lux and Dollar outperforming if the horizon is at least 12 to 18 odd months.
Okay. Well, we also have Sameet Chavan, Chief Analyst of Technical and Derivatives at Angel Broking, joining us on the show right now. So let's get an idea of what the charts are telling us with respect to the markets. Sameet, good morning. Thanks for joining us. How are you reading cues on the benchmark indices, especially given today's expiry, Sameet?
Hi, morning. Clearly, market looks a bit vulnerable now around its strong resistance of 10,600, 10,640. And we have already seen a decent recovery from low levels of nearly 500, 600 points in the span of 4 weeks. So with a directional view, we believe that 10,640 is likely to act as a very strong resistance. But for next couple of days, we are seeing a range wherein on the higher side 10,640 would remain to be a very strong girdle. On the low side, 10,500 would be seen as important support level. For the day, we expect Nifty to consolidate a bit, wherein on the higher side, around 10,600, 10,620, you could see selling pressure coming in. Around lower levels, probably 10,520, 10,530, we could see some kind of bounce back. So as of now, for the day, we expect some kind of range-bound activity, where on the higher side, we are likely to see some kind of selling pressure.
So range-bound activity for the expiry itself, but what stocks are you betting on today, Sameet?
We have a 2 buy and 1 sell recommendation. Buy would be an RBL Bank. This stock has been giving decent recovery of late. Yesterday we saw decisive breakout from near-term hurdle of 518 on a closing basis. So we expect this private banking stock to continue its upward trajectory. Immediate target would be around 542. It can be bought with a stop loss of 509. Second buy would be on Biocon. We have been quite upbeat on this stock since last couple of weeks, and day before yesterday there was a decisive breakout from near-term hurdle. So we expect continuation of this rally. Immediate target would be around 678. One can go long with a stop loss of 638. Sell side would be Apollo Tyres. This stock has already seen a decent profit taking from higher levels in last couple of weeks, and yesterday there was a breakdown below its support level of 286 on a closing basis. So we expect this weakness to extend a bit. Immediate target would be around 278. One can go short with a stop loss of 288.
I was wondering if there's some brokerage on Biocon. Agam, Morgan Stanley has come out with a note on Biocon. They maintained the overweight with the target price of 785 on this one. Sameet obviously sees some tailwinds on the charts as well for Biocon, so do watch out for that particular stock. Sameet, if I can throw in a set of stocks which did very well yesterday, and the one that stands out for me was Team Lease. A big breakout move, though didn't end at the high point of the day, came off a little bit from those highs, but a very strong move nevertheless. What have you made of the charts here?
Yes, we have been closely tracking this stock. Since the mid of March, the stock consolidated around its important support level of 2,2100, and since last couple of days we have already seen a massive breakout. If we look at the overall volume activity, it has picked up substantially, so that clearly indicates that at least in the near term this stock is clearly heading toward 3,000 quite soon. So see, fresh trade setup at current level would be quite difficult considering its 20% move in last couple of days. But those who have bought it at low level, they should certainly stay put. From here on, we would expect continuation of this move at least toward 3,000, 3,100.
Okay, we're talking about Teamlease, not really Biocon. If you can just get the Teamlease stock price, and that's the price, or that's the stock that Sameet Chavan is talking about, 2714 yesterday, 10% higher. Avinash, fundamentally, these flexi staffing companies, the business, I'm sure, has a lot of legs to go, but do the valuations look a bit stretched?
I think, Neeraj, looking at the kind of growth potential and the kind of investors who have invested in this company, I think these kind of premium valuations would continue. Clearly, I think the valuations are not cheap, but if one were to look at the next, say, 2 to 3 years, this business is going to be scalable significantly, and I would believe that whichever investor buys at these levels should take a longer term view. I think in the shorter term, the stock may not go anywhere, but looking at the business potential and the kind of operating metrics and the balance sheet position of Teamlease, I would not be surprised that even at higher levels there could be good appetite coming in.
Okay, well, that's the view coming in on Teamlease. Of course, we've also seen a surge in one of its peers, Quest Corp, recently. But with that, we'll move on to our special segment, Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up. Jayesh, good morning. What's on your radar today?
Morning, Agam. So I'm watching out for NBCC primarily because the fear and greed indicator has given a buy signal, and also the analyst consensus target price is nearly 18% higher from the current price. So, good return potential seen for NBCC as well. But let's have a look at how the fear and greed actually works. It's a proprietary Bloomberg indicator and uses the concept of average true range, as one of the key inputs as for calculation, and it oscillates on a zero baseline. So becomes very simple to interpret. Simply follow the color that you have and you'll get your buy and sell signal. So red is indicative of sell while green is indicative of buy signal, and whenever the color changes you get the respective buy or sell signal. Let's have a look at the chart of NBCC. So what you have seen the last 6 months is that the stock has steadily been on a declining trend. However, if you look at the last couple of months, there has been a consolidation of sorts, and as of yesterday's close you can see this big candle. With this, the fear and greed has actually turned positive. So the bottom panel, which has predominantly been red, that has actually shown you signs of green, and we have a big uptick after this small the red one that we saw, which gives it a good buy signal for NBCC.
All right, Jayesh, thanks a lot for getting us those details on NBCC. Of course, Fear and Greed is, as Jayesh mentioned, a proprietary Bloomberg property, and you can get a lot of trends based on that particular pattern. But I'm going to move across and address the telecom sector as well. Avinash, it's hard not to correlate the prospects of Bharti Airtel with those of Jio. But what we've also seen is, a reasonably decent quarter when it comes to consensus expectations, and the stock was also up and about. We had some broking calls, changing their stances to buy right now. How would you view Bharti Airtel right now, and what would you do with this?
No, I think looking at the numbers, Agam, the market was expecting a worse quarter, and I think what came out was definitely a better number in terms of operating metrics. So I think clearly, in a challenging period, if Bharti Airtel has actually delivered on numbers, it actually speaks a lot about how the management has actually addressed competition. But going forward, the competitive intensity in this space is not going to reduce. I think ARPUs have come down to their lowest level, 7 consecutive quarters of fall. So I think the markets are probably looking at the fact that this could now bottom out, and only probably a further upside could happen in the next, say, 6 to 12 months. I would believe that the stock will take at least a couple of quarters before we see a decent kind of re-rating, because clearly the way Jio is penetrating market share, I think it's actually taking away market share of most of these players. So it's better to hold on, but fresh buying at these levels would definitely not give a significant risk reward. I think in terms of the balance sheet, they have a large debt. Earnings growth, which is a critical parameter which most analysts observe, I think is not going to be great. So clearly, I think markets were happy with the consensus numbers. I mean, much better than the street numbers. But overall, it's it doesn't offer a very significant upside which probably an investor would look out for.
Sameet, if I can address Bharti Airtel with you at the levels at which it's trading at, what are the technical indicators telling us?
See, as a disclosure, a couple of weeks back, around 378, 380, we went with a buy recommendation. Our immediate target was around 422, which has already been made. But looking at the medium-term charts, we expect a continuation of this move at least toward 450, 460. So we won't be surprised to see this stock, outperforming its peer counters over the next few weeks. So any minor dip probably at current level would be a good buying opportunity, and now 410, 405 according to us would act as a very strong support.
Okay, the next set of stocks, I just want to bring up the life insurance companies, and if I can get those charts up on the wall and just show you the kind of return differential that we've seen in the recent past. Everybody was talking about, and I'll just go across to the wall for that. Everybody was talking about how ICICI Pru trades at a substantial discount to HDFC Life Standard Insurance. Now, these are the return charts normalized as of 27th March. And if you just look at what's happened in the last few days, remember the red line is the return that HDFC Life has given, I think, over the last 1 month. And the yellow line is the return that ICICI Pru has given over the last 1 month. Now, for the longest time in the last 25-30 days, ICICI Pru wasn't given any kind of returns. The last 2 days, post its results, it has really given this big sharp upsurge, while HDFC Life has remained constant. So, in terms of returns, ICICI Pru has certainly beaten HDFC Life over the last 1 month. Maybe it was warranted. It was trading at I think a 30-35% discount to HDFC Life. And after the results that came out, a lot of people started questioning whether the discount or such a wide discount is warranted. Sure enough, HDFC, by the brand that it enjoys and the consistent growth rate that it has always demonstrated, would typically trade at a premium to some of the others, but a 35% discount was probably a bit too wide. And if ICICI Pru needed one thing in order to narrow that a bit, or try and narrow that a bit, it was a good quarter, and they came out with an exceptionally strong quarter. 61-month persistency ratio as well stayed above or improved and stayed above the 50 mark. So all of those things worked well for ICICI Pru. It has so far, the last couple of days, done well. Who is to say what's next? Avinash, if I can press you or push you into asking what's next, I mean, if one of the 3 listed life insurance plays, what would you choose?
No, I think clearly, in terms of valuations, ICICI Pru still deserves to be re-rated. But in terms of management pedigree, I think HDFC Standard Life would definitely continue to get a premium kind of valuation. But I think SBI Life also definitely looks pretty attractive. I think we have numbers today, Neeraj. So I would believe that, yes, in the terms of the picking order, I think possibly first of all would be HDFC Life, ICICI Pru, and SBI Life.
All right. Well, we also had Ultratech's earnings yesterday, and the stock really didn't react too much. What we saw was, well, numbers largely in line, slightly mixed with respect to the consensus expectations. But let's get a technical check going on Ultratech Cement. Sameet, how are you viewing the stock? It's currently trading at about 4,100, a little over that. What levels would you consider, especially considering we've seen a little bit of consolidation over the past 3 or 4 days?
See, clearly since last 12 months, the stock has stuck in a broad range, wherein on the higher side, 4,500, 4,600 seems to be a very strong resistance. And at the same time, every time when the stock corrects back to 3,900, we witness some kind of buying into. And this is what we saw a couple of weeks back as well. The stock is now trading around its intermediate resistance, which is around 4,200. So, as a technician, I would rather watch out for this important resistance level. If the stock manages to surpass 4,200 on a sustainable basis, we could see a decent move coming in probably toward 4,350, 4,380. So, at this juncture, I won't take any fresh trades. Once it surpasses 4,200 with the confirmation, yes, one can certainly go long.
Okay, along with Ultratech, we've also had Syngene's earnings, well, mixed again. While we had a robust growth when it comes to the top line, well, its bottom line was subdued, just about 8% year-on-year growth coming in. But once again, I do want to take a look at what the technicals are suggesting for Syngene as well. Currently trading at around 679. What would you do with this, Sameet? How would you trade Syngene now?
See, in my recommendation list, I have Biocon. We have been quite upbeat, and at the same time, Syngene is the one stock that we have been closely tracking. Yesterday, we saw decisive breakout from V pattern. The stock has managed to give us this breakout with sizable volumes. So we expect continuation of this rally. Immediate target to watch out for would be around 720, 725.
Okay. Do watch out for these two names as well. There are some interesting bull deals that have happened. Actually, just a minute and a half left. But Avinash, just a quick thought here. I mean, if you track either Shaily Engineering or Uniply.
I think Shaily Engineering, earlier Neeraj had told you they are into engineering plastics, and I think we had a larger kind of HNI names like Ashish Kachole also getting in here. So I think definitely the growth numbers and the growth prospects for this company are pretty decent if you take the medium to longer term view. And I think this business is a very technology intensive kind of business where you would not be able to find many players. Not only the technology but the capital cost is quite exorbitant. So I think to that extent, probably it could be a good portfolio kind of stock if somebody would take at least a year or 2 year kind of opinion.
HDFC MF has bought in yesterday as well. So that's the other big fish that is biting into Shaily Engineering Plastics. The last 24 months have been rather good for Shaily Engineering, I must say. 1400 and counting on this one.
Well, okay, we're just about 20 seconds. There is just about 20 seconds left before we start getting pre-open rates. So let's start by taking stock of what the SGX Nifty is doing currently. Of course, Asian markets continue to trend, show mixed trends, considering the Chinese markets are looking at a decline of as much as 1%, but the SGX Nifty is flat at around 10,550. And along with that, now let's take a look at what the Nifty and the Sensex is throwing up for us, at least in pre-open. Well, a positive opening as per the indications. So taking cues from the Japan, not necessarily China, and with the Nifty and the Sensex marginally higher. Let's take a look at Wipro, because we did have earnings. There was a miss on their operational margins as well as their profitability, and the first tick indicates a decline of 10% right now. Let's also pull up yesterday's gainer TCS and see how that is doing. Are we looking at further gains in something like Tata Consultancy Services? Yes, we are. It's marginally higher there as well. Bharti Airtel was the other stock which was in focus yesterday. It advanced not only on the back of its earnings but also after it announced in merging Indus Towers with Bharti Infratel, and we've had some synergies playing out, because of which it did move up yesterday. And Infratel, of course, is advancing by another 1% in today's day of trade. We did see weakness in GAIL yesterday, which was down 9%, and let's see how that one is doing. And are we looking at extension of those losses? Yes, we are. It will be marginal though, and we are waiting for some of these rates to stabilize going in. And in the mid-cap space, of course, let's take a look at ICICI Lombard and how that is done right now, considering we saw steady earnings marginally in the green. And let's also take a look at Syngene International and see if there is an positive or a negative uptick for that matter. Yes, there is about a 1.5% increase, edging towards the mark of 690. And let's also take a look at Mahindra Finance, because we've seen mixed numbers come in there as well, at least with respect to expectations, but for now showing an uptick of around 4% at around 528. So those are just some of the stocks which we will bear in mind in today's day of trade. What else, Neeraj?
Wipro and the scene is worsened, but I don't think there'll be a 7% downtick really. These are just flash trades all over the place. It will correct, maybe not as much in trade. Let's see, there's some bottom buying that comes into play out here as well. Bajaj Finance, just shows the robustness of the business model, or the fact that people like it so much. Yields moving up to whatever levels they may. Investors in Bajaj Finance are never deterred, and this stock is back to some 1920, 1930 levels, doing reasonably okay for itself today. The strong moves that we're seeing in India Bulls real estate, interestingly so. Let's wait and watch I thought that the numbers, while they were good, probably had some anomalies and one-offs, so I don't think there'll be a 20% uptick really. But suffice to say, a good set of numbers. Mumbai-based real estate anyways on a bit of a roll. Let's wait and watch if there's some gains out here. DB Realty continues to rise and shine interestingly, and watch out for Hathway Cable. The last few days it's been really pummeled out of shape. A lot of selling that is coming in from CLSA Global. Taiwan consistently selling out the stake in Hathway Cable. Let's see if the selling ebbs a bit and there's some bit of buying that emerges out here. I think time will tell. Last but not the least, I think Quest Corp, which moved ahead along with Team Lease yesterday, is showing some signs of gains, as is ICICI Pru, is showing some more strength today, 2.5%. So very, very interesting moves that we're seeing here. We'll wait and watch. Let's give these rates a chance to settle. Meanwhile, get in Sameet Sarkar to talk about what's top on the mind of brokerages today. Sameet, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Nomura on Cummins India. Now, the brokerage has raised the rating on the stock to buy from neutral, but has marginally cut down the target price to 890 from 898. Now, according to the broker, the recent stock correction provides a good buying opportunity. Now, Cummins India, which was impacted because of weak exports and some unanticipated impact from GST transition in its distribution and power generation segment, had seen it in the last few quarters, but going forward, brokerage is saying that this is expected to turn around for Cummins India. The brokerage is also addressing the investor concerns related to outsourcing of work to other group companies by saying that their research shows that this will not impact the company's growth and margins in the near term. Lastly, it says that Cummins currently trades at a discount to sector despite better return on equity. Second, we have a Citi on Maruti Suzuki. Now, they have maintained their buy rating on the stock, but have marginally cut the target price to 10,800 from 11,600. Now, the brokerage has cut its FY18 estimates to factor in the volatility in other income. It has also reduced the FY19 and 20 volume estimates on the back of lower industry volume outlook. However, it expects the company's market share to increase on the back of the strong model lineup that Maruti has. Lastly, for the fourth quarter, it is expecting the company's revenue, EBITDA and net profit to grow at 14%, 31% and 25% compared to the last year.
Okay, thanks for that, Sameet. We will be watching out for some of these names. But speaking of Maruti Suzuki, we're expecting earnings from the company tomorrow. Avinash, what do you think is a fair price for Maruti Suzuki? How are you valuing this and how are you viewing this stock right now?
I think Maruti should definitely come out with a stronger set of numbers, in the fourth quarter. And I think FY19 outlook also seems to be quite promising, considering the fact that once rural demand picks up, they could obviously gain, from that piece also. I would not be surprised that over the next 18 odd months we could see a price of again 9,500 or maybe 9,800, provided clearly I think the oil prices remain in check, because that would be a key factor. I would believe that in the near term there could be a slight negativity for this, but over the medium to long term, this is one stock which is a clear representative stock of most of the FIIs and the funds, and any dip Agam should be used as an opportunity to buy, because clearly the secular growth story is going to continue for a long time.
Okay, we'll watch out for these as well. Get in the voice. Jay Bala, Chief Market Technician at cashthechaos.com, joins us right now on the show. Jay, really appreciate you joining us on such a short notice. Thanks for being with us today. How are you approaching trade today, Jay? Either on the indices or on any specific theme that you like for the expiry day today?
Yeah, I think the insurance space looking pretty interesting, and we had recommended ICICI Pru back in January for a price objective of about 580, and that was doing okay, and then it went back to retest the lows, and now it's broken out yesterday. That looking pretty interesting, and it's already had a run for the last couple of days. But it's likely to it's had the highest close since September 2017, and it's got a huge volume-led breakout. So basically, this is looking pretty interesting for the next series. It might have a little bit of pullback today, but it's going to do pretty well in the May series. And if you have that kind of time frame, that's a pretty interesting pick for today.
Jay, good morning. We're expecting earnings from Yes Bank and Axis Bank. Would you take a trade before their earnings come in, or would you avoid? And if you would take a trade, well, what levels can one keep an eye on?
A very fair question. And Yes Bank, I'm very positive on it. From a medium-term perspective, I think it's heading to something like 400 plus. So I think if my interpretation of the charts is correct, today it must come out with good results. And if you see, for the last few days, it's been trying to push higher, but it's not been able to do that. But it's trending in a positive manner. So I think the results could be the key trigger for that's required for it to break out higher. And I'm sure in the short term, it's going to do something like 340, 350 from a 1 to 5 day time perspective.
By the way, as the pre-open rate settle, Wipro looks like it'll start off almost 4.5% lower. Sameet, Chavan, would you take a trade on Wipro at these levels?
No, I mean, I'll avoid, although this stock, would be trading around its major support level 275, 272. I would be avoiding any kind of bottom fishing. Yes, if it breaks, convincingly 270 mark, then we could see further selling, probably toward 260 to 260 also.
Okay. Jay Bala, what about M&M Financial? That looks like starting off on a good note in a reaction to its numbers. Can it extend the gains? Do the charts show that?
Yeah, I'm overall positive on the NBFC space, and we've been positive on it since February, and we had said that that's the sector that's going to outperform the banking space. And so no surprises that the results are showing positive signs here. But I would still put my top bets on Bajaj Finance rather than M&M Financials. So I would expect Bajaj Finance to break out about 1950. And I would wait for that breakout to happen. And when it comes to M&M Financial, I would wait for it to cross something like 535 and wait, and I'll be patient until that point. But usually, we've seen Shriram Transport outperform the rest of the peers in the space. And, very soon these other names are likely to catch up. So I'm, as a sector, I'm positive about, but as of today's date, I would be, a little bit, patient for the breakout to occur.
Okay, stay on, gentlemen. Minutes away from the market open. Let's tell you all that you need to know to stay ahead in trade today. M&M Financial, the stock that we were talking about, reports 81% growth on its March quarter profits. Net interest income rises 17%. Asset quality too improves, with the gross NPAs reducing to 8.5% compared to 11 last quarter. The stock likely to start off on a positive note.
IDFC may be in talks to sell its broking and AMC arm for 6,000 crores as per Economics Times report. Bain Capital, Warburg and Yes Bank along with IndusInd Bank are said to be interested.
Shelley Engineering is in focus after HDFC Mutual Fund buys additional 1.2% stake in the company via block deal. The stock likely to start off at fresh highs.
Also likely to see activity in FMCG player Imami as the board will consider a bonus issue on May 3rd.
4% higher for that one too. It seems to be a good start. Brokerage radar today, Nomura upgrades its rating on Cummins India to a buy from a neutral, but cuts the target price to 890 rupees compared to 898 earlier. Brokerage is of the view that stock correction provides a buying opportunity. Well, a clutch of stocks, really, a lot of them starting off on a really good note. Avinash, of the latest bits of results that have come out, what has impressed you the most?
I think clearly, I think within the private banking space, I think numbers from IndusInd Bank, typically, I would believe that in a reasonably challenging quarter, Neeraj, ahead of the merger with Bharat Financial, I think this stock definitely could be re-rated. Obviously, once the numbers are consolidated, the kind of growth numbers which Bharat Financial, presented, once the numbers are consolidated on a standalone basis, microfinance business is going to grow by almost 40-50%. So I would believe that if somebody would take a longer term view, I think IndusInd Bank on every decline could be a good opportunity.
Anything smaller, Avinash? I mean, you keep on tweeting about these companies which come out with some very good numbers and have impressed you. Anything that has been really outstanding?
So I think within the smaller ones, I think we mentioned on your show we like GNFC. I think GNFC is one stock which has actually corrected after the results. But I believe that the kind of earnings growth and the kind of interest cost reduction for GNFC, we could see an explosion in earnings for FY19 and 20. Hopefully, if TDI prices remain up. And clearly, this is one space which is now getting more and more action. Specialty chemicals, Neeraj, is going to be one space which is going to be in action in the coming 6 to 12 months.
Okay, well, if I can take stock of what's going on with M&M, because that was also one of the top gainers in yesterday's day of trade. Jeff, if I can take this question to you, it's currently trading at around 859 as per, the pre-opening rates. We've started seeing some traction only right now. And, it's not come into focus because of its other peers which are doing much better. What's your view on M&M right now? And what would you do with this one?
Yeah, see, most of the auto stocks are trending quite well, and M&M is near its 52-week high of 862, and it's quite positive. And given that it's so close to its 52-week highs, it's more short-term trading bet because a breakout above the fresh 52-week high is likely to bring in more money into it. But I think it's got less upside in the short term. So I would rather go with something like a Hero Motors than an M&M, just for the fact that it's very close to its 52-week high.
Okay, and Sameet, would you expect more weakness in HPCL and BPCL considering we have seen that trend develop? Do you see further downside from current levels?
Yes, certainly. Since last 4 or 5 months, there has been a continuous decline in all the OMCs, and HPCL is one of the weakest counters within this space. Recently, we saw decisive breakdown from its major support level of 320, and since then, the stock has seen a massive nosedive. So we expect continuation of this move, at least in the near term. We won't be surprised to see this stock heading towards 280 or 278 also.
View on HPCL, but with that, I'm going to let Avinash go. Avinash, thanks for joining us and giving us an update and your view on the markets. But we're not too far away from opening, so I'm going to hand it over to Neeraj. Neeraj, over to you.
Just taking a final top call from both our experts. Sameet, if I had to ask you for one top call for the day, which one would that be?
I'll stick with Biocon. Certainly looks good. Would expect continuation of this move. 678. This is our near-term target. One can go long with a stop loss of 639.
Okay, Jay, what about you?
I would stick with the IT space, and I think Tata Elxsi is coming out with its numbers today. I expect it to come out with stellar numbers. So, and I would still expect this rally to continue. If we recall, we still have a price objective of about 1,300 for that. So at least a spike high is likely for the stock, and from such an extreme short-term time perspective, that makes a lot of sense.
Okay, Jay, Sameet, please stay on for a moment. We'll just take in opening thoughts from you. The markets have started and a flat start for our markets. So actually in line with what the SGX Nifty was indicating, I don't think the mid caps and the small caps will be doing something too different. So you'll probably have a start which is, well, flattish, maybe actually slightly better, about 0.25% higher for both the mid caps and the small caps. Let's get the heat map up and try and see what's moving and what's not. The gainers, not too many gainers, but it's a fair bit of green on the screen is what we're seeing. So a lot of green, very little red. So the market breadth seems to be okay. And save for some hiccups to the IT names, predominantly Wipro and HCL Tech, we're not seeing too many stocks which are losing either. So it's a flattish start, not too many gainers, not too many losers. It's a start that you could have done with, honestly. Anything that stands out from the gaining side? No. Hindalco, a bit of a recovery. Mahindra and Mahindra, some bit of a pushback, or rather, some bit of a continuation of a move from where it left off yesterday. So that's, I think, the long and short of it. BPCL is starting off marginally off, and ahead of numbers, Axis Bank is slightly off in trade, but these could well change. Fair bit of green, not enough red, but must say not enough gainers either. The top gainer is less than 1% higher. Very quickly, 2 or 3 pockets that I think I want to point out before I hand it over to Agam. Firstly, the guidance uptick that came in from Mahindra and Mahindra Financial Services, and that leads to the stock moving up about 3.5% higher. So good going for M&M Financial in the session today. What about stocks that did well yesterday? And in fact, okay, UK MHRA worry is not really impacting Indoco too much today. They did impact the stock yesterday though, was down 6%, recovering a bit of lost ground today. What about some of the others? Stocks which saw some bulk deals. Shelly Engineering up about 8%. Uniply just a couple of percentage points, but Shelly Engineering Plastics is really setting the stage on fire. 1,500 and counting, really good going here. Last but not the least, stocks that are trading in and around new highs. So L&T Infotech, just about okay, but Team Lease continues to rise and shine. Raymond not so much, it's actually corrected a little bit, but Team Lease, big moves, and that continues to rise and shine. Agam, what are you spotting?
I have Emami on my list. We did have the board considering bonus, and on the back of that we are looking at near 7% rise. That's up and about, and Hathway Cables has picked up, and we're starting to see some gains there as well after some volatility that we saw in the previous few days. Sterlite Technologies, of course, advancing further. Of course, we've had the results coming in as well, and Gati now up as much as another 3%. Do remember the board will consider strategic and financial partner today, and we will have news on that one out as well. And well, along with that, Neeraj has already addressed L&T Technologies and L&T Infotech, building on the gains that we've seen, and DB Realty among the other counters doing well in today's day of trade. On the losing end, we have weakness in Reliance Nippon yet again. Now it's down another 9.4%. This was on the back of earnings that we saw the decline yesterday. PC Jeweler continuing to show further declines. It was moved down by as much as 16% yesterday and losing out another 7% today. And a lot of depreciation coming for Jindal Stainless as well. That's down 5%, along with, well, Bombay Rayon. That's also not doing very well in today's day of trade. But on the whole, we're looking at more momentum with respect to gainers in comparison to losers today.
Yeah, Wipro is one sore spot. Otherwise, I think it's doing okay for the large cap space. And in the mid cap end of the market, Hemami doing very well, as Agam stated. Hathway Cable sees some gains, not enough. Reliance Naval, one sore spot on the losing side. Final thoughts from our experts before we get in our special guest on the show. Sameet, before we thank you, anything that's popping up on your screen in the first few minutes of trade?
Z Entertainment certainly looks good. This stock has corrected a bit in the last couple of days, but overall, if I look at the daily chart, this stock has managed to defend its trendline support level placed around 580, and today we are seeing a good positive traction, some kind of buying interest in early trade. So I would expect Z to cross 600 quite soon. So Z Entertainment is one stock certainly looks good, at least for next couple of weeks time.
Okay, Jay, what about you? Anything that pops up on your screen the first few minutes of trade?
Yeah, PC Jeweler, it's looking like an excellent shot at this point of time. I think it's likely to drop somewhere close to 215, 210. So that's the best trade for me at this point.
Wow, interesting names. A short call on PC even after the 8% fall. And remember, Jaybala spoke about Tata Elxsi as something that he would like as well. Sameet Chauhan, Jaybala, gentlemen, thank you so much for taking the time out today and joining us this morning on Bloomberg Quint. It's a flat day for the markets, but we've had a good run. The question mark only is with all of the key events lined up over the course of the next 1.5 odd months, how would the markets do? Global as well as local events, both which may have a bearing on the markets. Mahesh Nandurkar, India strategist at CLSA, joins us right now on the show. Mahesh, so good having you. Thanks for speaking to us at Bloomberg Quint. This is Neeraj here. Good morning. I fear a half an hour window might also not be enough considering the issues that we have at hand, Mahesh. But let's try and piece all of this together in the next 10-15 minutes. Starting off with the macro worries, Mahesh, what's your individual gut opinion or the house opinion on the impact that could have on flows and markets as a result of what's happening to the yields, one, and to the currency, two?
Well, yes, as you rightly mentioned, the macro is clearly become much more adverse over the last 6 months or so. And clearly there is no sign of relenting. We are seeing oil going up. We are seeing the local bond yields going up. Now even the US bond yields have also breached that technical 3% mark. So on the whole, I would say that the macro is not really looking great. And that's what makes us cautious on the markets, because the valuations are also at a higher level. Nifty trades at about 18.5 times or so from the on the 1 year forward earnings basis. So we don't really have too much of cushion at this point in time. The big sort of saving sort of factor for Indian markets has been very, very strong domestic flows. They still continue even in the month of March. If you were to adjust for the factor of the arbitrage funds, the flow into the pure equity funds was also very strong. We'll see what happens into like April and May. But that is one single factor, according to me, which is helping the Indian markets as of now. And any sign of weakness over there can have a negative impact on the market outlook.
Mahesh, so what gives? I mean, from those 9,800, 9,900 levels, there is a bit of a pullback that we've seen. Arguably, the expectations of a fairly decent quarter of earnings now and FY19. The management commentary thus far, I must say, has been fairly impressive too. What happens? Do you sense, because of the valuations and the macro, a higher probability of a drawdown before we stabilize or move higher?
Yeah, I would say that from a 12-month perspective, or even from the rest of the 2018 calendar year perspective, I think we should probably be expecting only a single-digit return from the market. So keeping that in mind and keeping where the bond yields are, many of the sort of AAA corporate bond, are offering 8.5%, 9%, even more than that, kind of yield. So at this point in time, I would say that the risk reward seems to be unfavorable for the equity markets. I would be, happier investing, in the debt market as of now.
Mahesh, with voices growing louder with respect to a change in the interest rate trajectory in India, what's your view here and what impact can it have on Indian equity markets?
Well, the trajectory has already changed in the sense that the bond yields, which bottomed at about, I'm talking the 10-year government bond yields, which bottomed at about, let's say, 6.4, 6.5, the middle of last year. Now we're at about 7.7, 7.8 kind of a zone. I would say that a large part of the potential fiscal slippage, or even the fact that the inflation could be moving upwards, to a large extent have factored in. Maybe another 20-30 bips from here on, on the bond yields as such. But yes, I think there could be some more adjustment that the banks might be doing. We've already seen some of the large banks taking up the lending rate by about 15 to 20 bips. Maybe another similar increase could be likely going forward. So clearly this is not a great outlook for the Indian equity markets. So as I sort of mentioned before, we are looking at a single-digit return from the equity market from here on, especially because we have seen a pretty nice pullback to about 10,500, 10,600 on the Nifty, as we can see over the last 1.5 months. And mind you, this has happened despite the fact that the oil has just kept on going up over the same period. And if you look at the historical analysis and the correlation between the oil price movement and the relative performance of the Indian market, it is probably inversely correlated in the event where the oil price increase is driven more by supply side. See, if the oil price goes up because of the very strong global demand, then it's a different matter, because then it means that the situation is improving all over the world, the economic outlook is great, the risk appetite is more, and then in that kind of an environment you see more inflows into the emerging markets and also in India. But currently, I would say that the oil price hike is driven more by the supply related factors. So that kind of an environment is not really a great environment for the Indian markets to do much better.
Okay, Mahesh, so in light of all of this, and actually maybe if I can just throw in one more macro question before we get to the micro, I really want to talk to you about the Mumbai DP plan. You guys have been one of the foremost guys and consistent guys in talking about real estate. But just one quick question. This whole chat about Trump and Iran and the deal, and maybe a pullout from there as well, how big an overhang would be a global factor? Because hitherto, the last 6 months, we've seen global markets and the Indian markets in turn overcome almost all hiccups, be it the trade war talk, be it the Syrian strikes, and now maybe this overhang of the US-Iran deal talk failure.
Well, yes, on the global front, there are a few risk factors. One that you're clearly mentioning, which can have further adverse impact on the oil prices, as in the oil prices could move up, if that were to happen. Apart from that, over the next 1 or 2 months, what we will be sort of keenly watching out for is the stance taken by the ECB. Remember that there is some expectation that ECB's commentary could turn a little bit hawkish, and there may be some moderation in their bond sort of purchase program. The US bond yields have already crossed 3%, which means that and which has also resulted in a bit of a strengthening of the US dollar currency as well. So these are further risk factors for the equity markets in general and specifically for India.
All right, Mahesh, in one of your notes, you've also mentioned, spoken a little more about the political scenario in India itself. How critical is the Karnataka state election? Well, I do know that you mentioned it's only about sentiment, nothing more. But what can it mean when it comes to the 2019 general elections, and what sort of an influence can that have on equity markets?
Well, my chats with variety of fund managers internationally and also domestically, the message is very clear that these stock market participants ideally want the same government to return in 2019 elections, right? So any incremental data point which will support that thesis will be liked by the market, and in that context, the outcome of the Karnataka state election is going to be a very, very important data point, because the next possible data point will be coming only maybe another 6-8 months down the line, when we have the elections in the state of Chhattisgarh and Rajasthan and MP. So in the remaining of the 2018, the Karnataka election is a very, very important data point. And if you see the the events over the last 2-3 months, I would say that the market has gotten a little bit concerned about the possible outcome in 2019. So it'll be really interesting to see what happens in what happens in the Karnataka state election. If the BJP is able to form the government over there, then that is something that will clearly be liked by the market.
Okay, so Mahesh, which brings us to what should or what is it that you would advise your key clients to do in terms of themes as well? One, the standard question of what do you think works well in the scenario of a 12-month return of a 12-month single-digit return that you are making a case for?
So I would say that some of the themes that look very interesting is one is housing recovery. So as you rightly mentioned, we have been talking about this theme for quite some time. We continue to be very, very optimistic on that. The anecdotal evidence and data that we're collecting seems to be supportive of that thesis. If you also see the numbers being reported by the property developers over the last 6 months, and also the recent commentary continues to make us optimistic. So I would say that the best way to play the potential housing market recovery would be the real estate developers themselves, followed by the housing finance companies, and then some of the select building material companies as well, such as cement, to a smaller extent, but I would say the bigger beneficiaries could be the consumer durable companies, which supply household products like the fans and the lighting equipment, etc. Also the plumbing pipes and the other construction related companies. Also the EPC contractors, which also have clearly some sort of play on the housing recovery as well. So this remains our single most high conviction theme ideas over the next 12 months. In fact, I would say that the housing market recovery will be a multi-year theme in my view. It's not just a 12-month theme. It's a theme that should ideally unfold over the next 4 to 5 years.
And at the risk of overgeneralizing, Mahesh, how would you peg staples versus consumer discretionaries right now?
Well, yeah, so that's an interesting question. So, yeah, so our sort of single biggest high conviction theme is housing. Then second would be rural, because clearly with the next 12 months in mind, the government's focus is going to be definitely on reviving the rural sentiments. We are already seeing some initiatives on that side, and we are expecting a pretty steep increase in the MSP for the upcoming summer crop season, the Kharif crop season, which should further boost the rural demand recovery. And from that perspective, consumer staples, some of the select consumer staple names look pretty interesting. I would basically go with the consumer names that have a higher proportion of demand coming from the rural side. That's one. Among the discretionary side, we would go with we would go with the autos, especially some of the premium and auto segment, which could also see some demand improvement coming through as well. So, but clearly rural will remain in focus, which would include staples, tractor companies, and some of the two-wheeler companies.
Anything niche consumption, Mahesh? And again, I'm just kind of making a bit of a narrow focus out here. But one is what staples are doing. Two is the different forms of consumer themes which are coming both in the private markets and in the listed domain as well. Are you guys liking anything? Because the valuations are exorbitant, but maybe the growth numbers are here to stay.
I think one sub-segment of the consumption theme, which is doing pretty well, where the growth seems to be improving, is the QSR, the quick service restaurant model, or the food services segment. I think that is one segment that is looking quite interesting to us. Okay.
Well, the key highlight from me from this interaction, Mahesh, Nandurkar, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. And look forward to having you more often on this forum.
Thank you very much, Neeraj.
Well, the key highlight from me from this conversation, Mahesh Nandurkar saying that he is bullish on the bond markets from these levels. Equities don't seem to be a yes at the current point of time. The markets, equity markets are lying absolutely flat right now. We need to slip into a very quick break. But the last couple of chats that we had with Mahesh were on the consumption theme. Right. And that's what this week's Alpha Muggles has been about, Agam. Right. Nikhil Vora of 6th Sense talking all things consumption. So that's coming up right after this break. Stay tuned.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. The ability of new players to cause disruption in the market is much higher than the established behemoths. That is the belief of Nikhil Vora of Sixth Sense Ventures. Speaking to us on our special series, Alpha Mughals, Vora talks about picking the right disruptor and also tells us how the Future Group missed out on India's retail boom. Listen in.
I think it's interesting because you look at one basic parameter or few basic parameters. Look at the global market cap and look at the largest components of this global market cap. Consumers is by far around the largest. It's around 35 to 40% of global market cap. You look at infra market cap to global market cap. It's at 3%. It just goes on to show that a lot of businesses are meant for debt and not equity. So obviously that's not a space that we are very keen on. Consumers has always been an equity-driven business, and that's what really drives us into that. Second aspect always is that whereas the world changes or no, the consumer behavior does. Consumer behavior always changes, and it's been proven across life cycles that you look at decadal changes and consumer habits, the way they look at businesses, the brands, products, services, distribution, analytics. I think it just keeps changing as we evolve. And it's a great measure to look at what consumer behavior patterns will be over the next 5-10 years and so on, and thereby how businesses will need to morph and become relevant for the consumer of tomorrow, today. Yeah. So we've always been quite intrigued with that part of the business. So while I've been a consumer analyst in my mind all my life, and we've done listed almost throughout our life, but it's always been very interesting to look at what the future of consumer will be, and thereby how businesses which will be leaders of tomorrow, one needs to really want to really get into those businesses and so on. And if they are leaders of tomorrow, they're getting born today. So that's where we really started to evolve into a lot more of the private space of consumption.
Yeah, actually that was the point. I mean, just part two of that conversation would be that if you're betting on leaders of tomorrow which are born today, they necessarily would have to be largely, not necessarily, but largely would have to be in the unlisted space. And the problem for almost every investor, at least in the minds of investors, would be that getting out of that pocket, unless there is a listing that happens, would be a very difficult proposition. The liquidity might be a problem, so on and so forth. Now, you took this bet, not now, but 10 years ago. Have there been problems in that journey? And part two of that is also that has the nature of how you're investing within this consumption space as well, because you're saying that it's a constantly evolving process, changed from the bets that you were making when you founded Sixth Sense and it started off to where it is right now.
I've been on both sides, right? I've done listed throughout my professional journey, and I've done private now throughout my personal, through my entrepreneurial journey. I frankly see no difference between the two. While one thinks that liquidity is an issue in private, the fact is as long as businesses grow, there is more than adequate pools of liquidity which chases that business growth. And as we understand consumers' businesses, they fundamentally require capital twice. One at seed stage and second at growth stage. If any consumer business requires capital third time round, it's not a consumer business. That I can guarantee you with all certainty. So I think it almost always is a domain where if the businesses start to scale up and do well, there will always be a huge amount of buyers who will evolve. And we've really found that across our own personal journeys also in the last decade or so, when I've been personally investing a fair bit of my personal capital into private space. I've been an investor in various companies, which includes some names like Paytm, where I was one of the early stage investors, Vinny Cosmetic, which is the Fog Deo brand, Parag Milk, which is the Go brand, Kangaroo Kids, Purple.com, Infinite Analytics, BVG, and so on. So I think the good part about all these businesses, as one looks at, is that they've all become marquee names in their own right now. And there is more than adequate liquidity available in case of anyone wanting to do an exit at any point in time. So I don't think liquidity is really so much of an issue. I think the issue is about really buying into businesses which are going to be relevant. And if they're relevant for the next 5-10 years, liquidity takes care of itself.
Okay, Nikhil, so the question then therefore comes to mind is you spoke about how globally consumption stories have been these big money spinners. I look at India. Profits of companies like Reliance or TCS, probably higher or equivalent to the entire profit pool of the large to be reckoned with listed consumption space. Now, we all know the presence of the great Indian consumer. Everybody keeps on talking about that for the last 15 years. It's not showing in the profits in the way that it should probably have shown. Do you think the next 10 years could actually increase the profit pool that some of these consumption stories have?
I think, Neeraj, what would happen is that you will look at a situation where I think the depth in the Indian consumer markets were not really there. So you've actually had a situation.
Can you explain that?
Yeah, so you've actually had a situation for the last 5 to 6 decades when the entire Indian consumer market has been symbolized by a duopoly in any category that you can think of, right from a fairness cream to a hair lotion to a soap and so on, which is quite weird because frankly there is no IP attached to a consumer product. I could make a Dove as good as Unilever makes it. There's no IP attached to a consumer product, and yet it was symbolized by a duopoly. I think it only happened because there was a fear of taking on the leader in the space. So there was a mortal fear of taking on a lever's distribution or an ITC's distribution, and thereby you never found a lot of players trying to jostle for the same brand space. Because the shelf space would have been very expensive for any other player to compete with levers or ITC and so on. I think life is changing, and life is changing disproportionately as we speak right now, and I'm sure significantly as in the next few years. I think you will start because of distribution getting opened up. I think you'll see a lot of new brands evolve, and you've actually not seen brand evolution happen in India for the last 5-7 decades. So you'll see a lot of new brands evolve, a lot of new entrepreneurs really come in and take their own spaces. And the moment they start to do that, I think the larger consumer brands, the entire branded business in India will actually get reinvigorated. So I'm actually very positive about the way values can be created in the consumer businesses. Obviously, there will always be a underlying thought that challengers will always grapple more market share than the leaders do. So to me, there's a lot of wealth which is at the bottom of the pyramid in consumers. And I'm not saying as far as markets are concerned, I'm saying as far as values of those businesses are concerned. I think there's a lot of wealth which is really hidden there, and that will significantly seize up. For example, if I have to just give a few names, sure. Let's say Patanjali, and not that I'm a great fan of what happens or the way the business is run, but the fact is that they've created a disruption in that marketplace. They've not yet troubled any consumer company because they don't really take more than 10% market share in any category, but they are relevant. Yeah. So Patanjali's evolved in the last 5 years. Vini Cosmetic, Fog brand, has really evolved from the underbelly and taken on leaders like Axe and Unilever. And you will see a lot more happen. Let's say Viba, for instance, I think has almost created a category on its own. So I think you will see a lot of players come in and take on relevant market leadership in their domain, which is not really the domain of the larger consumer companies. So you just need to distinct the two, which is one is to say static large consumer plays like the Unilevers of the world or ITCs of the world, and second is to say where the consumer movement is happening over the next 5-10 years, which is happening in these new age entrepreneurial run companies, which will actually occupy the niche and which will become full blown over the next 10 years. So I think that's where really the values lie.
Okay, so here's my question. HUL, maybe due to a low base or otherwise, showed phenomenal volume growth in the quarter that went by, the quarter 3. Expectations are, and a lot of people who are invested say that what stops, due to GST and otherwise, what stops a company like HUL from hitting volume growth numbers, maybe 15%, maybe 20% as well. My question to you is, as an investor who understands this space, who breeds this space, would you bet on disruptors which are challenging a vertical or 2 vertical or 3 verticals of companies of behemoths like HUL, ITC and some of the others? Or would you believe that there is enough potential even in the behemoths while they will be seeing disruptions and challenges from focused niche players?
I think it's a very interesting question and a thought which always seizes our mind. To me, if earlier one has lived with the mortal fear of taking on leaders, I think that fear does not exist anymore. Yeah, which always means that as new players evolve, their ability to take a relevant market share in differential categories will always be disproportionately higher to the leaders' ability to protect their market share. So to me, the value resides in what the future of consumer behavior will be, which means that if I don't want to sell, I don't want to be doing a higher number of let's say black tea sales, which really means nothing to me. I would much rather get into categories which are very futuristic and thereby a lot more sustainable and a higher growth. So if I have look at let's say dips and sauces as a category, I think a Viva might do a better service than possibly what a levers might end up doing over the next 5-10 years, because they've not even evolved in that category today.
Okay.
So I think the challenge is not so much about saying whether the category is growing at 10-15%. It's great, but not really as alluring as possibly it was in pre-days. I think the challenge is about identifying categories which are going to be relevant in the next 5-10 years, and whether the larger entities are really present in those categories. Are they doing really great category innovations within that fold? I don't really see significant innovation happen from the larger companies for sure. And the irony is that disruption can happen from challengers. It doesn't happen from leaders. So Unilever can't disrupt their own businesses, and nor can an ITC do it. And frankly, closer home, nor can an Infosys do it, right? So you'll always have disruptors who are challengers, who will by default be able to take a relevant market share, create a relevant market, because the noise value in that category will be a lot larger than what a Unilever can do in that category. So I think the value also resides there, because if you come in early into those categories, and like I said, they require capital only twice. So if you come in early into those categories, I think you potentially have an ability to buy into a dozen potential Unilevers in the making. Not of that size and magnitude, but of a relevant size and scale, which is still extremely valuable for all the businesses that one would look at.
My last question, Nikhil, and that is in the retail space. I don't know what thoughts you have here and whether it forms within a part of your consumption story or your investing themes or not. Have you invested in a retail company at all?
So we've invested in Ethos,
okay,
which is I think more a brand play rather than a retail play, but yeah, it's pretty much in that that positioning that one looks at.
We are on the throes of having one of the largest retail players taking a sizable chunk or taking over an incumbent of sorts in the Indian online retail space to compete with the other behemoth as well. Any thoughts here?
So I can take names, which you might not be able to do. I'm okay. But I think it's going to be a fantastic time in the Indian e-com business or retail business in generic, both offline and online. I've always believed that Indian retailers, and specifically, let's say, Future Group, Kishorji and others, missed out a fair bit of Indian retail growth story, purely because by the time they got relevant and large, it got overtook by e-commerce. So they actually did not benefit from the great Indian retail boom, so to speak.
True.
My sense is that at some stage over the next 3 to 5 years, you will see a significant alignment happen on offline and online retail. The first moves have been made, or it's getting made as we speak. So what happens with possibly Flipkarts and Walmarts and so on. You will possibly see a lot more happen in that space. Paytms obviously happened and so on. I think what would be very interesting is that while these large behemoths get created, it also gives great opportunities for vertical specialists to become relevant. Because the TG of, let's say, a Flipkart to a Snapdeal to a Paytm to a Amazon is almost similar. So that TG is similar, but there is a great TG market which has evolved because of the e-com boom, and those are meant for vertical specialists, and I think they'll become extremely valuable.
Anybody existing right now?
So let's say if one looks at beauty and wellness as a category, beauty category, I think the TG market is very different to what a TG of Amazon and Flipkart is, or a Paytm is. So I think that category will become extremely relevant, and you already have few players like a Nykaa or a Purple, which are slightly dominant players in that category. I think they'll also become very valuable because these platforms will become brands and they'll have its own value parameters. Something like Ethos, obviously we are investors, so some amount of bias that would obviously evolve. Is that I think as every brand has its life cycle, and I think the next gen will not want to own the brands which the earlier gen used to wear. And the moment you want to move off from theoretically a Titan, the only way is to go up, which is to wear a Swiss watch, and which makes Ethos a very relevant relevant player in that category because they are the largest distributors for all Swiss watches in the country and so on. So I think you will see evolution happen. It could be offline, could be online, but I think there will be a great surge for vertical specialists who have a TG market which is only theirs to become very relevant, dominant and valuable.
You can catch the whole show at 10:30 a.m. today on Bloomberg Quint Live. The next discussion is an earnings discussion. Reliance Nippon reported a 35% bottom line growth in the March quarter. Asset managers also making inroads into smaller towns. In the fourth quarter alone, clocked in a 25% AUM growth outside the top 15. So, what's in store going ahead for Reliance Nippon? Let's find out from the company's Chief Executive Officer, Sundeep Sikka. He joins us right now on the show. Sundeep, good having you. Thanks so much for joining in. What's been the AUM growth in quarter 4, and can you discuss your current AUM mix and the growth outlook there?
I think I'm very happy today. I think as we come out with the first financial results post listing, I think we have clearly seen the profitability grow up by from 402 crores to 522 crores. I think which is an increase of 30%. The revenues have also gone up from 1436 crores to 1815 crores, which is a jump of 26%. Overall, if you were to look at the AUM of the company today has gone from the AMC has gone up from 3,50,000 crores to about nearly 4 lakh crores, which is a jump of 13%. And the mutual fund AUM, which were from 2,10,000 crores, has gone to 244, which is a jump of 16%. I think what is more interesting is if you were to look at it, the qualitative part, I think we have the number of retail investors have gone up from 68 lakhs to 82 lakhs. And during this period, we have added highest retail inflows for the financial year 17-18. Reliance Mutual Fund has added the highest retail AUM in the industry. And also, if you see, I think the trend in mutual fund industry has been very positive post demonetization. But post demonetization, 1,90,000 crores of retail money has come in, and Reliance Mutual Fund has done 29,000 crores, which is the highest. So for us, going forward also, I think our focus remains on profitable growth. Our focus remains on retail. Our focus remains on getting sticky assets, and going forward also. I mean, this year I think we closed our SIPs 25 lakh. We started the year with an annualized SIP book of 5,600 crores, and we closed there at 9,000 crores. So our focus continues on profitable growth, and we believe going forward also the positive trend in mutual fund industry will continue, and the kind of retail presence and the execution capability that we have shown in smaller cities and towns, I think we continue to disproportionately gain from that.
On one hand, you're seeing healthy inflows, be it on the SIPs or lump sum, on an average. What kind of quantum is seen on the redemptions on a monthly basis?
No, broadly, the way we have to see this is, on a net number, every month I think we are trying to, the net inflows are increasing. I think we have to understand that I think we are in the business of wealth creation. There will be time people will be investing from a long-term point of view, and they will also book, they invest with a particular goal in mind, and there will be redemptions. But we continue to see net positive flows over the last many months, and even in the last 2 months post-budget, where the markets have been a little volatile, we continue to see the very strong positive inflows.
Okay. How do you plan to expand your distribution network? Any banks that you're looking to do a tie-up with?
Yeah, from our perspective at this point of time, we have the largest distribution network. We are directly present in 280 cities. Last financial year, we've added 120 new locations. There are roughly about 150 locations where we are the only mutual fund company which is present. We have a very strong distribution through our IFAs. We have 65,000 IFAs. Almost all the public sector bank, private sector banks are also distributing our product. And along with the physical distribution, we have also built a very strong capability on the digital side. Last year, our digital inflows have doubled. Last quarter, we have done more than 3,35,000 digital transactions. And clearly, both on the offline and the online, I think we continue in expanding our digital presence. Clearly, going forward, you will see us opening more branches as well as investing a lot more on digital.
Okay, and what's the focus point in terms of penetration in non-metro towns? I think you've got some growth there.
No, I think we've always, our focus has been the non-metro towns. If you were to look at the industry average of the B15, which is the smaller cities and towns, is 18%. For us, it is 22%. We continue to see very, very healthy inflows from small cities and towns. And as I mentioned earlier, the fact that we have seen the highest retail inflows coming in the last financial year and the post-demonetization, majority of the flows are coming from smaller cities and towns. The fact that we have opened 120 new branches, we are in 280 locations, and some of the branches we are the only mutual fund present, you will clearly see us gaining disproportionately in these markets.
We wish you all the best for that, Sundeep. Thanks so much for taking the time out and speaking with us today on Bloomberg Quint. Markets lying absolutely flat. The Sensex about 75 odd points higher, but the Nifty Bank is not moving an inch. And Wipro likely remains that one stock that has had some selling in the session today, the top loser on the Nifty, 3 million shares traded. With that, it's a wrap on this leg of Indian Open. Up next is the Avinash show. Stay tuned to Bloomberg Quint Live.